everyone. Hope you are all doing good. Hope your investments are doing well. As we talk, the market, that is the Nifty or Sensex, whatever you call, is almost at an all-time high. So hopefully the investments which you have done in the various good companies whichever you have selected, hopefully based on the knowledge which I have shared in the various sessions till now, almost 87 sections we have done in the value investing series, wherein we have explained about the fundamentals of selecting a company, how a company performs, how the stock market works, how the economy works, how to select a stock, what are the valuation metrics to be evaluated before entering a company, how to read the financial statements, balance sheet, P&L statement, cash flow statements, then also how to evaluate a business model, how to know about the management of the company, and how to evaluate various red flags, that is the forensic audit of various companies. So all these things we have, at least I have put in the efforts to try to convey that to the subscribers of the channel. So today we have come up with session number 88, wherein we are going to analyze a company. The company selected here is Rajesh Exports. So we will be analyzing the stock in a very detailed manner. So before starting this, you should understand that this is never a stock recommendation, and neither I am invested in this stock as of now. I had come across this value stock wherein there are some things which attracted me towards the stock. I have put this in my watch list. I am exploring the various facts behind the company, and once I am convinced on those facts, which obviously I will be explaining or discussing in the session, then I would be probably entering the stock. But this is never a stock recommendation, so I strongly recommend you should approach your investment manager before getting into any investments. Also, you should know that this video, wherein I will be explaining many things which are related to Rajesh Exports, is not for actually educating you about Rajesh Exports. It's about the approach of a value investor towards analyzing a particular stock, probably to find out whether it is undervalued, overvalued, what is the business model, what is the company management, are they ethical, are they complying to all the corporate governance, are they good business leaders, then finding out the valuation matrices, then we'll discuss about the forensic audit, like if is there any mishappenings or the corporate governance issues or any accounting jugglery being made in the company. And then we'll discuss about the macroeconomical factors which is affecting the business of the company and hence the profitability and the future returns of the company. Then we'll be also obviously exploring the fundamental analysis of the company. So as always, our channel is all about fundamental analysis and understanding the basics of a company and how to invest in that. We never discuss about any technical analysis of the stock. So before getting into this, I would like to quote the words by Mr. Bill Ackman. So he had once told that we look for very high quality businesses, simple, predictable, free cash flow generating, dominant business with moats around it. So this is like we should look for how much the business can give out as cash in its remaining period of its lifetime. Basically a predictable cash flow, predictable and steady cash flow. So this is all about investing. Obviously, as hardcore value investors, which I believe you are now based on the various videos which I have been putting up in our value investing series, the current session being session 88, we have to dig out an undervalued stock, but need to definitely find out why it is deeply discounted. So this is otherwise called valuation discrepancy, which I have mentioned in various earlier videos which has been uploaded in the channel. So this valuation discrepancy is what distinguishes a growth investor, or otherwise called a normal investor and a value investor. So we should find out why the stock is deeply discounted, whether the discount will be there for the lifetime of the stock, or is it a temporary glitch in the stock, and once the things get corrected or the scenario changes, then the stock valuation improves, the stock become profitable, and hence the value of the company also increases, and hence the price of the stock goes high, and hence it becomes a multi-bagger stock. So this is all about value investing, and this is what we are going to do today also, as far as the stock Rajesh Exports is concerned. So we will find out whether it is a value pick, and if it is a value pick, why is it steeply discounted, and if steeply discounted, is it having a future prospects for uh, increasing the valuation, catching up with the actual price, and rewarding the value investors like us, becoming a multi-bagger stock. Now let us talk about the business model of Rajesh Export. Now before getting into this video, let me remind you that this video is going to be slightly a bigger video, because I have tried to include all the major parameters or the perspectives which you should be analyzing while selecting a or while picking a stock. Now in this, only thing which is not included is the uh, cash flow projection and the what is called the DCF, the discounted cash flow model. So this is not included in the analysis. Otherwise, if you see all other fundamental analysis and the thesis behind which we are going to invest or going to select this stock is very well explained in this video. So talking about Rajesh Exports, this is one of the Fortune 500 company with revenues more than 2.9 trillion rupees. So a quick brief of the company. The company Rajesh Exports was incorporated in 1989. In 1995, the promoters of the Rajesh Exports came up with an IPO for expanding the manufacturing facility. So they, at that time in 1995, they had come up with a 10 crore IPO, obviously for expanding the manufacturing facility. So after the IPO, the stock got listed in the market, and in 1996, the Rajesh Export was successful in expanding the manufacturing facility. This manufacturing facility was for manufacturing the uh, ornaments, the gold ornaments. In 1990, world's largest jewelry manufacturing facility was set up at Whitefield, Bangalore. They have other manufacturing facility in Cochin and also in Dubai. A company who has extensive gold refining, gold jewelry manufacturing, wholesale and retail gold jewelry distribution. So this is like Rajesh Export is into end-to-end value chain of gold. Like they are not into mining, but after that, once the third party or the other company, which is the miner, gives the crude gold to Rajesh Exports, then they refine it. Then after refining, then they manufacture jewelers. They make bullions, the gold biscuits, what you call. Then other things which is of gold. Even the securities which is stored in various central banks, also in the form of gold, is supplied by Valcambi to various nations worldwide. So this is their trust over the years, and also this Rajesh Exports has got, as I told, the Shubh Jewelers, through which they are retailing out the gold jewelry. So end to end value chain business they are into. Yes, they are not having retail stores India wide or worldwide. Their uh, retail store currently is only in Karnataka, but the future plans we'll discuss going forward. In 2013, India's largest gold refinery was set up in Uttarakhand, and this is having a gold refining capacity of 400 tons per annum. And later, in 2015, Rajesh Exports did their largest acquisition of the world's largest refiner of gold, Valcambi. Valcambi is located in Balerna, Switzerland, and this Valcambi refines over 35% of world's gold. So this is huge. So they have acquired this company at around 2,500 crore at that time in 2015. This Valcambi is having a gold refining capacity of 2,000 tons. So total Uttarakhand facility having 400 tons and Valcambi having 2,000 tons is like 2,400 ton gold refining capacity Rajesh Exports is having. So if you see in India, hardly around 900 tons of gold is what is consumed in a year. So 2,400 tons is like much beyond. And also if you see, India is one of the largest consumer of gold also in the form of jewelry. So that is according to around 900 tons. So the production capacity of Rajesh Exports is much beyond that. This Rajesh Exports is claimed to be world's lowest cost gold product producer. So this is like they are having end-to-end solution. So obviously they can optimize the cost, the overheads from the end-to-end value chain perspective. And yes, because of that, they are able to offer the jewelries and end products at a lower cost. Also, they claim to have advanced R&D facility at Bangalore and Balena, Switzerland, and is having 1 million designs in gold jewelry. Recently entered into lithium-ion battery and display manufacturing units. We will discuss further on the company and the subsidiaries which are associated with these products. They are having almost 3,000 designs of jewelry available at Lab Jewelers stores, and the Lab Jewelers was set up in 23 capital cities of various states. But there are some discrepancies here. If you see, this Lab Jewelers seems not functional anymore. Actually, in fact, I have written about this to the company management. I am yet to get the clarification on that. We have to presume that they have changed the name from Lab Jewelers to Shubh Jewelers, and the retail stores are now limited only to Karnataka, which is almost having 83 stores. As soon as I get the clarification on various points which I have raised with the company, I will be coming up with another video, just like what I have done for earlier video which I have explained for Nava Limited, wherein from the price which I had mentioned or I had released the video, it is almost trading more than 50% now. Return of more than 50% in 3 to 4 months. Now let us get into the management evaluation. So there are various things which I have included in the video going forward as far as the evaluation of management is concerned. But for now, I limit my discussion only to discussing about who are the promoters of the company. So mainly the CEO of the company is Mr. Rajesh Mehta, and the MD and CEO used to be earlier Prashant Mehta, but now in this year January he has resigned. So regarding that, we will discuss further details in our forensic audit session of this video. So the new MD is Mr. Suresh Kumar, who has replaced Mr. Prashant Mehta. Now Prashant Mehta also is a promoter of the company. So we'll get into that in a later session. If you see, as per me, this is like a family-run business because Mr. Rajesh Mehta, who has founded the company, and if you see the balance sheets and related party transactions, then there are holdings of promoters, which is like his own family only, whether it is Prashant Mehta, Rajesh Mehta, all those things. So the holdings, the business is like a family-run business. But yes, there are. It's a huge turnover company because they buy a lot of gold. They have to refine it, and they have to sell it back. So if you see the refining business, the gold refining business is having a very low margin. Now talking about the management, so Prashant Mehta, Rajesh Mehta, all these people are the promoters. Rajesh Mehta being the CEO and Prashant Mehta being the ex-MD. He's having more than 15% holding in the company. So they are kind of family-run business, and though it is having large turnovers, many things are not as such revealed to the public. Uh, that is one thing which is to be mentioned. Almost the promoter holding in the company is around 54%. So there are holdings by DII, FII also. Recently, the FII has increased their holdings in the company. So this is all about the management. Now we'll directly get into the fundamental analysis. In the fundamental analysis, we will be discussing about the various factors. Now, first one is PAT, profit after tax. So this is mentioned in crore. In 2018, uh, the profit was around 1265 crore. Now the profit has increased slightly. Then again it has dipped while the COVID time, obviously. Then again in 2023, the profit has become 1432 crore. So the profit has increased from 2001 to 2023. The profit after tax, which is important for us, which adds to the book value, which is the real money which the promoter or the shareholder gets. Now talking about the shareholder fund, this is again which is adding to the book value of the company. It was 7,000 crore in 2018. Currently we are at 14,000 or 15,000. So it is almost doubled in say 6 years. So company has been steadily improving the book value by adding the profits to the book value as the years goes by. Book value per share is mentioned here 242 in 2018. Currently it is at 500 rupees. The stock is trading at around 550 rupees as I speak. So it is almost, the book value is slightly above 1. So it is, as far as the undervaluation is concerned, the stock is not overpriced at all. It is trading at a fair value, or I would say at a good valuation. Operating revenue, if you see, it is very high. It is around, because they are refining the gold, the raw material consumed is much high, so that is why around 1,87,000 in 2018, and currently it is at 3,76,000. So the uh, PAT is mentioned here. PAT is only a small portion. So if you see the red line, that is the PAT, and this is the sales. So if you see the profit to sales ratio, which is nothing but the net profit margin, it is very less. It is hardly 0.4 to 0.7%. So that is how the refining business works. If you see, as I mentioned, the net profit margin has dropped from 2018 to 2023. As we speak, it is around 0.4. This I understand is mainly because of the higher expenses incurred for the Volcambi business. So going forward, if they reduce the expenses, then they may have a profitable margin and hence a higher PAT figure. Going forward, now return on capital employed, this accounts to the debt taken by the company as well. So in 2018, the ROCE has been around 14%. Now it has dropped to around 9%. So that's not a good thing as such. And also the return on equity, if you see, it doesn't account the debt taken by the company. So uh, in 2018, it was around 20%. Now it has reduced to around 10%. So this is also not a good sign as far as the return ratios are concerned. Net profit margin, as I explained earlier, has reduced over the period. So this is also, I told the operational efficiency has to be improved so that the margins also increase. Though there is an increase in sales volume, the PAT figure has increased, but the margins has reduced over the period. Debt equity ratio, it has reduced a lot, 1.22 in 2018, and as I currently speak, it is only 0.05. It is like almost debt free. So this is a good sign of company reducing the debt and improving the business fundamentals. Now comparing Titan, which is one of the peers of the company, though Titan is only into retail business and not into refining business, still the comparison here is only Titan, because there is no other company who is refining to such scale in gold, which is listed in the stock market. So if you see, the Titan is having a retail business, and in retail business the margins are high. The net margin, if you see, it is currently 7.5%. It varies from 7.5 to 8% recently. But in our case, the profit margin currently is around 0.4%. So it is not at all comparable. But yes, the turnover is much high in case of Rajesh Export. So the PAT figure also is higher. But the return ratios, if you see, ROE is 30%, ROA is 13%, ROCE is 23 to 27%, which is much higher. Now let us get directly into the valuation check. So stock valuation. So if you see the price to earnings ratio, it was 17 in 2018, and 2023 it has reduced to 10. In 2022 it was 20. So the stock price also has become half in 2023 recently. So around 500 550 rupees from the high of 1,000 rupees. So the PE also has become half here. So valuation wise, PE ratio, if you see, it is not that expensive. Price to book also, as I told, as the book value has been increasing drastically, but the price has not been catching up accordingly. So the price to book has almost become 1. So it is at a good valuation currently at the point, if you only look from the price to book perspective. EV to EBITDA, the enterprise value to the EBITDA ratio, is another valuation matrix which I use. Here the EV to EBITDA in 2020 has been much attractive, but here if you see, you are still getting it at below 10, which is again a parameter. If it is below 10, it is considered to be undervalued. Net current asset value per share, NCAVPS, is nothing but a matrix by Graham, the guru of Warren Buffett, used to utilize. In 2013, the figure is this figure is per share. So this is at around 600 rupees or 602 rupees, and the stock is trading at around 550 rupees. So as per Graham, the stock price will be two-third of the net current asset value per share, but the stock is not that undervalued, but still it is almost less than the net current asset value. So at this uh, time period, we cannot get such a undervalued uh, criteria as Graham mentions, but at least we are getting the price below net current asset value, which is again a undervaluation, and it is a value pick as per me. Now we'll talk about operational efficiency of the company. If you see the free cash flow, in 2018 it has been negative, in 2019 it has been positive, 2020 positive, in 2021 negative, 22 again negative, and 2023 it has become highly positive. So free cash flow currently it is at a good free cash flow point. What is free cash flow? Already I have mentioned in my earlier video, wherein it is nothing but the operational cash flow minus the capex, or the money which has been spent for the plants, properties, etc. So if the capex is done, you need to get a returns as well. So you should have a continuous increasing operational cash flow. If it is not increasing consistently, here it is not, and it is having lot of variance. So variation is there, and hopefully the new businesses the company is taking up will make the free cash flow consistent. But currently it is not a good sign, though in the current year you are having a good free cash flow. This is free cash flow per share. The share is trading at 550 rupees, and the free cash flow per share is 391 rupees. So current free cash flow figure is very attractive, and the current valuations are very undervalued, and the free cash flow is also higher, means the company is currently at a good situation. But if you have a consistency like this, then this will be very difficult. If you see, there was a rising trend here, then in 2020 it reduced because of COVID and all those things. So if you have a continuous rising trend, then it is good. Otherwise this is not consistent as of now. Working capital requirement also has increased, which shows the operating efficiency of the company has reduced. This working capital already I have mentioned in my earlier video. If you are not clear on that, please go there and watch that video and then come back here. The working capital requirement increased. Along with that, the cash conversion cycle also increased, means it is highly depicting the inefficiency of operations by the company. If you see, in the past the company has performed well with a negative cash conversion cycle, meaning the receivable days were less, so they were getting the money from the end user quickly within lesser number of days. Inventory storage was also for a lesser time, which means that whatever they have spent on, they were not keeping much with them. They were directly converting that into the uh, cash by selling it off to the end user. But if you see here, that days also has increased in 2022. And in payable days, means whatever raw materials they have procured from, say, the gold miners or whatever, they were to delay it by 20 to 30 days. Now these days it has been reduced to 16 days, means they are quickly paying off, which again shows their lesser muscle power, or their inefficiency of operation. So that is why the cash conversion cycle has increased from minus to gradually positive. So cash conversion cycle increasing with increasing working capital requirement shows that the operational inefficiency of the company. but still the asset turnover ratio has improved due to increased volumes in sales with the same assets. If you see, the asset turnover ratio has increased over the period 7, 6, 9, 10, 14. So it is at the highest point here. With the same assets, the revenue or the sales has become very high, which is good. Debt to sales ratio also has reduced, means the company is able to generate more sales with lesser debt, or the liability or the reliance of the company over the debt to do the sales has reduced. So this again has reduced over the period, means it is showing a operational efficiency. But cash conversion cycle and the working capital requirement, as I mentioned in this slide, is really a negative thing as far as the operational efficiency is concerned. Working capital is much important for me, and I really look into that. Even I have discussed this in my analysis for Nava Limited also. If you have not seen that video, I recommend you to go see there. So as I told, the cash conversion cycle, CCC, also known as net operating cycle or just cash cycle, is a metric expressing how many days it takes a company to convert the cash it spends on inventory that is tied up in the production and sales process back into cash by selling its products. So as I told, the money taken from the paid to the raw material team or the firm, and then converting that to the end product, and then selling it to the customer, getting the money back. So that cycle, if it is reduced or if it is negative, then it shows the high uh, muscle power or the operational uh, efficiency of the company. This matrix takes into account how much time, is all about time, the company needs to sell its inventory, how much time it takes to collect receivables, and how much time it has to pay its bill. This is what the cash conversion cycle, the equation is given here. Also, the cash conversion cycle is very well explained in my earlier video. If you have not seen that, I recommend you to go see that also, so that this makes more logical for you while analyzing. Debt, there has been a drastic reduction from 2018. If you see, it is around 8,700 crore. It has reduced to just 724 crores in 2023. So since 2018, it has been a drastic reduction in 2019, and again from 2020, it has been a slow and gradual reduction to 724 crore. So financial liabilities, if you see, the drastic reduction has happened in 2019 to 2020. The 6,000 crore, 6,200 crore has been reduced to 1,278 crore. How it has reduced? Again, if you see, explore here, the loan against the company's own fixed deposit with banks. So that has been reduced from 4,200 crore to just 831 crore. All the figures are in lakhs. That is why you have to divide by 100 to get the crores. So this is all snaps taken from the annual reports and financial statements of the company, which is available in the company's investor relation website and also in the BSE website. So you can, if you want, you can download it and you can see it for yourself. Also, there is foreign exchange earnings by the company. So this is like they are having this Valcambi, the foreign entity in Switzerland, also in Singapore. They have got Rajesh Export PT. So all these things, they are having various income from in dollar terms. So the difference between the INR and dollar, between the imports and exports, that adjustments is done in this foreign exchange earnings and outgo, and that is recorded as a profit or loss in the company's balance sheet. So this is also one way by which the companies having such huge exports and businesses outside are earning money, or sometimes can lose money as well. Now let us get into the forensic audit session. So here, this is the most important session of this video. So here I will be discussing the uh, forensic audit things, or the red flags, or the so-called red flags, which I have found out in this company while analyzing. So this can be a red flag or some concerns. If we are able to resolve the issues, then it is a green flag for us to probably invest in the company. Obviously, this is not a recommendation. This is just my viewpoints which I am sharing here. You can have your own due diligence and decide the investing decision on this company. The first point is regarding the auditors. So the company has been employing very small auditors. The BSD and company is currently the auditor for the company. Earlier they used to have V Shivasankara and company. Then Ramana Reddy and company. Then before that, PK Rungta and company. So there has been every 2-3 years they change the. Uh, I have seen the trend that they are changing the auditor. The reason behind that is unknown, but I consider it as a red flag because the company is having a huge turnover, but they are utilizing a very small consultant. And if you see the figures mentioned in various balance sheet, including rupee crore to lakh conversion, also there has been various places there has been some uh, figure mistakes or the quality of the figure been reported or the way by which the uh, notes for the financial statement is prepared is not up to the mark. So if you are handling such huge turnover Fortune 500 company, then you need to have a minimum standard auditing firm which will give the results and which will do the auditing in a proper way, and this will give a comfort to the investors. I'm not telling that small uh, auditors are not good. They are reputed companies in their own perspective, but if you see, for such large turnover companies, they need to have some uh, larger auditing firms wherein there is more manpower, more time being spent on the reports, and so that you don't make mistakes, you don't miss reports, and you audit the figures properly, and investors also get a clear understanding about the uh, figures or the business. Now, the second thing I would like to mention about Shubh Jewelers, which is their retail chain. So, Shubh Jewelers is one of the retail chain wherein almost 83 retail firms are supposed to be there in Karnataka, wherein they are selling their jewelry after refining and manufacturing. They have got a lot of designs, as I mentioned in the uh, earlier slides. But there is another company, as I told, there is Lab Jewelers. There is no news about Lab Jewelers. Wherever I search, it is mentioned as closed. So have they converted that Lab Jewelers into Shubh Jewelers? That thing is unclear. They are mentioning it as associate entity, but there is no much clarity on that. If you see, Valcambi is a step down subsidiary, as I told, so that is reflecting here. So uh, the, the buy price was around 2,500 crores, so that is clearly mentioned here. But if you see why this is being mentioned here, I don't know what is the relation of the company with this. That is slightly unclear. Another point, the third point, is regarding the uh, intangible assets which is mentioned in the balance sheet of the company. So it is around 775 crore, and last year it was, in 2021 it was 728, in 2022 it was around 775 crore. In 2023 we don't have uh, the data, so once the data is available we can evaluate that, but currently it is 775 crore. So 775 crore intangible assets means it is something like goodwill. But if you see note 2, the split of that, in note 2 it is property, plant and equipments. It is not an intangible asset. It is not mentioned here. So in all the balance sheet, if you see the consolidated balance sheet, the intangible assets are mentioned as 2. Probably this is the Valcambi, which is the largest refiner in the world. So they are having a name just like Coca-Cola having a goodwill in the balance sheet, because their brand names itself will give them good sales turnover. So probably that is the thing, but 775 crore is not 1 2 crore. So they need to mention what is the intangible assets, their breakup. So the note 2 is unclear. I have written this to the company in the 10 pointer queries which I have asked them. So the reply is yet awaited. Once the reply is there, I can share that with you. But currently, this is sort of a red flag. The chairman tells, or even the in the balance sheet, it is in the company annual report, it is written that the company is debt-free company. So already, as I told, if you see, this is the latest 2023 quarter four results. So borrowings is 724 crore in 2023. In 2022, it was 813 crore. So obviously, the company is not debt free. The debt to equity ratio is very low, below 0.05% or below 0.05, but the company is not debt free. So this statement is not actually correct. Now regarding the promoter, has given unsecured loans to the company since very long, since the start of the company, and this is like in the 19 crore around. It's very small amount compared to the total debt of the company at that time. So I have explored how the promoter can give the loan to the company. So if the promoter is a director as well, the company can avail the loan provided that interest payable by the company is as per the market rate, that is interest rate, and declaration is taken from the director that the money given to the company is his or her own and not borrowed from the third party. If both these conditions are satisfied, then the promoter can lend or give the loan to the company. So if you see over the years, they have given, see if you see each slide every year, 2015, 2016. So these are the amount. So over the years, it has been reducing. It has been in a reducing trend. So this is the latest one. So in the short-term borrowings, you can see unsecured loan from directors. This is 1926. So 1926 is nothing but 808 plus 1184, and also 1403 plus 946 will give you 2350. So this is like 23 crore. So here it is 19 crore. So this is the borrowing which is done by the company. So currently it is having 1278 crore in the year 2020. So that breakup is given here. So over the period, the debt has been reduced, or the borrowing from the promoter has been reduced. But I wonder why the promoter has given the loan rather than taking from a standard lender. So the interest rate at which promoter is giving, probably in the earlier times, once I checked the balance sheet or the related party transaction, the interest rates were very low. So this is by goodwill of the promoter, by giving some amount of the debt to the company and servicing the debt with a lower interest rate. So this is like giveaway to the company for its growth. So that much lesser amount it can take from the banks, wherein the bank charges higher interest rates. So that can be actually taken as a good thing, provided the interest rate provided by the directors are lesser. So earlier times it used to be lesser, but later reportings, the interest from the directors' loans are not separately mentioned in the related party transactions, unlike the old annual reports. So next is in the related party transaction, Valcambi step down subsidiary is showing some purchases. So in 2021 it is shown as 791 crore. In 2020 it is shown as 46,000 crore. So this figure is abnormal. I don't know what is this. Even if you see in 2021, again that 791 crore has come. In 2020, it is 46,000 crore, 46,000 odd crore. In 2019, it is 40,000 odd crore. So what is that figure? What is the transaction which is done in the related party, but in the name of Alcambi under the purchases? It is not known. Whether it is the raw materials we procured for the Valcambi operation, probably that is the thing. But whether that would be mentioned under related party transaction, it is doubtful for me. I have asked this to the company authority through the investor relationship email. So if I get it, I can share that with you. But this is a huge figure. Similarly here. So in 2022, there is no transaction. Purchases is zero. So it is not that in 2022 also there will be purchase for the Valcambi operations, right? So if that purchase is there, because they are having a larger turnover this time, so obviously they would have bought. So if that purchase has been done in Valcambi, then it has to be reflecting here, but it is not reflecting. Means this figure is not that figure. That is some other figure which they are yet to disclose. This is that figure which is mentioned here. All the related party transactions has been listed by me in from 2012 to 2022 in a tabulation. So this is the loans given by the promoter Rajesh Mehta, Prashant Mehta, Mahesh J. Mehta. So earlier 13 crore, 18 crore, 26, 10, 22, 20, 18, 14, 8.50. So almost the loan has reduced over the period, and so as they have reduced the debt burden also of the company. One company which I have seen here, a associate company, is A1 Exports. So this company, no idea what is this company about. this seems to be some associate company of the uh, Rajesh Exports, but what they are doing, there are some related party transactions done to this company, 152 crore, 110 crore. So, what is this company doing? No idea about that. So, that is one concern here. In Else Private Limited, there is some funding of 75 crore. We'll talk about Else Private Limited going forward. Now, another red flag which I was having is particular of the employees, means regarding the employee salary. So, during the year under review, there were no employees who were drawing remuneration in excess of 60 lakhs per annum or 5 lakh per month if employed for a part of the year. Means no employees is drawing more than 60 lakhs per annum is what they are telling. And also the number of employees in 2021 was 181. It has been reduced to 2022 by 135. Mr. Rajesh Mehta also in his earlier meeting or the media meet was telling that he is trying to reduce the cost of the higher uh, expenses incurred by the Worldcambi employees, because in Switzerland the cost of the employees which is acquired by the company is very high. So they are trying to reduce the number without affecting the much of the employees there. But they have reduced. It seems they have reduced from 181 to 135 employees. So now come to the standalone operation, means Indian operation of Rajesh Exports. The employee expenses is just 2.65 crore. Earlier it was 4.22 crore. From this, I understand probably that they have reduced the employees in the Indian operation as well. So that is why 4.22 has become 2.65 because of the reduction in employees. The split of that is given PF, salary, etc. Now you go to consolidated, means it is inclusive of Valcambi operation. So now 2.65 for Indian operation, and for Indian plus global it has become 175 crore. So 184 crore has become 175 crore. So I think major reduction is not in Valcambi operation, or but only the employee base in India. That is why the reduction is only from 184 to 175 crore. There be some cut in the Valcambi employees as well, but so is in the Indian contracts as well. So in India, they have reduced almost 2 crore, and rest reduction has been in Valcambi employee benefits or the number of employees there. So obviously 181 to 135 is a cut probably of both Indian and Valcambi employees or the foreign employees of the company. So if you compare 175 crore to 2.65 crore, it is not comparable. The cost for the employees for Valcambi operation or the people in Switzerland is very high. So that is why the chairman is telling that he is trying to reduce the cost of the employees in Valcambi, so that the expenses reduces and also their profit margin improves. But if you consider 135 employees and 175 crore, 175 divided by 135 is like 1.29 crore per employee. So they are telling the employee is having only 60 lakhs maximum per employee per annum, but as per this calculation it is becoming 1.29 crore. So that figure is not matching. So there is some discrepancy there. So the if you see the here, if you see the remuneration by chairman is only 1.2 lakh per annum. Prashant Mehta also is 1.2 lakh, and also Bhavesh V. Mehta, who is probably the nephew, who is the relative of the director, is mentioned here, is getting 1.8. So why the relative is getting payment? Maybe he is involved in some business activities. So it is negligible, but 1.2 lakhs. So promoter is getting 1.2 lakhs, and our calculation shows 1.29 crore per employee. So this raises a red flag that why this high uh, employee benefit is mentioned here, and who is getting that high benefit. So that is some concern. So here the split of 175 crore is given the salaries and wages, then the PF contribution and the welfare all together get together is like 176 crore. Another red flag thing which I came across is Rajesh Explores slides as MD Prashant Mehta resigns. So this happened in December 2022, December 5th, 2022. So it mentions that the Rajesh Exports share slide to 718 rupees. At that time, it was trading around 1000 rupees in October, November, and it slide to around 7 and 8 with a 1% slide because the managing director has resigned. Prashant Mehta had been a MD since the IPO of the company in 1995. The company mentioned that he has retired and he has resigned because of uh, just like that, because he has retired, so he has resigned. No other red flags there is what the company has mentioned here. But if you see Rajesh Exports, Prashant J. Mehta, he's having almost 12.59%. I think I mentioned 15%, sorry. It is actually 12.59%. So it is around 2000 crore. So he being a promoter, he was an MD, now he has resigned. So Mr. Kumar has joined as the new MD. So why that has happened is one question. So maybe he has grown old and he wants to step down is some possible option. But again, as always, the company has not given much clarity on this. Now, next point is regarding the subsidiary company ELST Private Limited, ELEST. So, India's first display fab to be established in Telangana worth 24,000 crore. So, Telangana government signed an MOU with Karnataka-based ELST Private Limited for proposed fabrication unit which will manufacture next generation display for smartphones, tablets, computers and laptops. So, it is like display manufacturing facility is to be set up by Rajesh Exports under the subsidiary ELST Private Limited worth 24,000 crore. So, this was the news in June 2022, a year back. And if you see in 2022, an investment of 200 crore has been done by Rajesh Exports in ELS Private Limited. So it is supposed to be a subsidiary company of Rajesh Export, right? But if you see here in the related party transaction, ELS Private Limited is not shown as a step down subsidiary, just like Valcambi. It is not shown as a step down subsidiary. It is shown as common director. So why not mentioned as a subsidiary? 200 crore is not just a small amount. It has invested. So it is a subsidiary. That is why it has invested. Is was my understanding. But if you see here, it doesn't seems to be a subsidiary. It is kind of associated entity or a group company. But the relationship or the profit sharing of this company with Rajesh Exports is unknown from this thing. So here it is again raised a red flag. And if you see again in 2022, so Rajesh Export beneficiary of rupees 18,100 crore battery PLI scheme by central government. So create subsidiary for manufacturing advanced chemistry cells. So the subsidiary's name is uh, ACC Energy Storage Private Limited. So so there were three companies. In fact, there were four companies. There is an addition recently. So four companies under the PLI scheme of government were in for the manufacture of advanced chemistry cells, which is lithium-ion battery basically for energy storage. So for EV vehicles. So this is a boost given by the company, boost given by the government, central government for reducing the imports from China and other countries for the EV lithium-ion battery and for boosting the production inside India. So one company was Reliance Industries, then second was uh, Ola, third one is Rajesh Exports, and the recent addition, the fourth player is Hyundai Global as well. Now, Rajesh Exports signs for a 4 gigawatt hour lithium cell factory to be set up in the state of Karnataka. So again, there was an agreement with Karnataka for 5 gigawatt hour lithium cell factory. So it executed an agreement between Ministry of Heavy Industries, Government of India, Department of Industries and Commerce, Government of Karnataka, and ACC Energy Storage Private Limited. So ACC Energy Storage Private Limited is supposed to be another subsidiary again for lithium cells. So ELS Private Limited is also for lithium cells and the display manufacturing and also for EVs. Then why another company ACC Energy Storage Private Limited is newly formed? Again for lithium ion is some question. So same product handled by two companies formed. One is formed in 2020 October, which is ELST Private Limited, and in 2022 ACC Energy Private Limited is formed. So why two companies? because ACG Energy Private Limited is a new entity for execution of manufacturing of advanced chemistry cells, which is lithium ion cells, which is same as that of ELST Private Limited. So why two companies with the same product portfolio? Is it again some related party transaction related problem, or I don't know. So that is some question I am having. Now another concern I am having here is regarding the annual report. So annual report, if you see, currently we are in August 2023, wherein we are Rajesh exposed recently 3-4 days back they have given the results for Q1 2023-24. So in that next year financial year, we have not yet got the annual report for 2022 to 2023. So without an annual report, what the company thinks, what is the management thinking, what is the future plans, what is the different entities, ACC Energy Private Limited or else Private Limited, who is the means what is the update on the Valcambi operations, what is means the labor cut, the cost reduction things, then what is the update on the Shub Jewelers expansion in India and worldwide, because chairman had a vision of increasing from 83 to 1500 uh, stores in India and abroad, so that their retail business increases and their profit margin also increases drastically. So currently the profit mainly is coming from the refining operation, gold refining operation, wherein the margins are very low, though turnover is very high. So this updates anything if you want, either it is through earnings call, which is unavailable. Quarterly results also, if you see, there was one issue that uh, they have not attached uh, the cash flow statement and also the audited report. So that was again a problem. So auditing is again a problem. Audited reports are not properly filed, and if you see the quarterly earnings call, once the Rajesh Mehta, the CEO, had with NDTV is in 2017. Now it is 5 years ahead. There has been no other meeting or earnings call with the chairman or with the management. So how we will gauge the company's uh, prospects? This is what I was telling: audit report and comparative cash flow statements missing from the filing. So based on this, company again had to face queries from SEBI and from investors, and the stock had fallen almost from higher level 52-week high to almost half of it to around 500 rupees. Now it is in last 1 week it has increased some 2, 3, 4% to 550 rupees. After the probably after the results were slightly good, but again the margins are low. Now let us get into the macroeconomic evaluation of the company, which is the last session of the video. One concern which I was having is that in 2018, 2019 or 20, wherein the company got the PLI scheme of setting up the lithium-ion battery in Karnataka. At that time, BJP was the ruling party in Karnataka, and also center was again by BJP. So there was a streamlined operation of things happening there. But now in 2023, Congress has come in. So will the new government support the PLI scheme, lithium-ion battery manufacturing facility setting up in the Karnataka? So will it already the company have invested money there? So will it go in vain, or there will be any issue? Because politically, if issues come in, then all the plans will be doomed. So that is one concern I was having there. And also inflationary effect. This was some interesting thing which I had studied. So I've plotted a inflation over the period from 2014 to 2023. So currently it is at somewhere around 7.5 plus. So at this time, the data from council shows that World Council shows that for every 1% rise in inflation, the demand for gold in India soars by 2.6%. Means the price of the gold also increases drastically, disproportionately compared to the rise in inflation. Since gold is considered as a protection against inflation by investors in developed nations, it also acts as a protection against currency depreciation for investors in emerging nations like India. So this is what the philosophy is. So uh, the investors sell off the risky assets and go to safe havens like slow growth or but steady growth assets like gold. So this is the importance of gold, and Rajesh Exports is one of the largest refiner of gold, and hence if they improve their retail business and if they get well with the new initiatives like the battery manufacturing and also EV manufacturing along with the display fabrication facility, then they may come up with a good flying colors and good profitability. Rajesh Exports again is, as I told, is ranked 353 currently out of the 500 Fortune 500 companies. So, though there has been loss of investors due to the inadequate data being available in the site and by the promoters, if the company can come back with more transparency and more data sharing with with the investors and uh, with the authorities and with the registered agencies, then uh, it will build confidence among the investors, and then the company will find its real value and get out of the undervaluation, and it will reward value investors like us if the business turns around as far as the all three four businesses I mentioned here. So this is not a buy recommendation or hold recommendation or sell recommendation by me. It is just for evaluating a company end to end. So hopefully, I think I have been successful in uh, analyzing or helping you analyze a company from end to end. So what all things are to be seen, especially forensic audit, it's very important because many red flags has to be seen before just investing out of emotions. So once you have a conviction, once you do a lot of research, then you can invest in some company. Then because there is no turn around from there. Because if you wrongly invested in some company, then all your money will be uh, going for a toss. So you have to spend a lot of time. You have to research all this data which I have collected from various sources is with lot of efforts and pain. So hope this really helped you have some insights on the company and also the format by which you analyze a company. Hope the session was useful for you. If you have any comments, do feel free to comment in the comment box below. If you like the video, please like and share the video to the needy people who really like to do their own research and uh, upgrade themselves to a uh, good investor. So see you in next video. Till then, happy investing.